Hello again, everyone. Looks like we have a full house today. My name is Shiraz Madan, the CEO of Sustainable Capital Finance, and we're very excited to kick off our latest webinar focused on EV charging infrastructure for commercial property owners. We hope to provide some insight into how EV charging stations coupled with solar energy and energy storage can improve NOI and property value. With that being said, let's get started. For those of you who are new to SCF, we'll provide a proper intro into the company. And from there, we'll get right into the value prop for EV charging and then break down some industry particulars over the next 3 slides before wrapping up use case economics and timeline analysis. At the very end, we'll have a Q&A session. So please feel free to type in your questions as we go along and we can address them at the end. So a bit about sustainable capital finance. SCF is obviously everyone's favorite third-party financier for C&I solar and charging infrastructure. What does it mean to be a third-party financier within this context? Well, it means that we work with developers, organizations consuming energy, and property owners in providing sustainability solutions that either reduce expense or generate revenue. Those assets are on site, owned by SCF, while our customers enjoy the economic benefits of those assets and a zero out-of-pocket CapEx experience. We've transacted roughly 150 million in sustainability assets, and we're in collaboration with the world's largest independent power producer, NextEra, whose market cap is around 145 billion. The value proposition for EV charging infrastructure is very straightforward. We have a healthy problem in that EV adoption has become increasingly popular and widespread across the country, whereas the charging infrastructure to support that EV adoption has lagged behind. The opportunity here is for commercial property owners to install that charging infrastructure for customers, for tenants, and the public and realize immediate value with very little friction. There is no investment needed on behalf of the property owner. The cost of development, installation, and equipment is incurred by SCF. A new source of revenue is generated by means of a charging revenue share. There's a new property feature, an amenity that can be shared with tenants and customers. You can attract new customers. Think of a retail location that is now attractive to EV drivers, and there is no maintenance required for the property owner. SCF will not only install but maintain the assets on site. And lastly, you have the confidence knowing strong financial partners are backing this solution in SCF and NextEra. With all that being said, I'm going to pass the baton to my teammate Joel Binstock, who's going to get into the nitty-gritty. Joel, it's all yours.
Thanks, Shiraz. Well, if you guys don't know me already, my name is Joel Binstock, and I'm the Manager of Originations and Strategic Partnerships here at SCF. And I'm going to tell you a little bit about why now is the time for electric vehicle charging infrastructure, and what are the types of candidates that make the best use case for EV charging. So in 2020, there were over 300,000 EVs sold in the United States. That represents only about 2% of our market share. But as we forecast that out to years 2025 and beyond, we can see that electric vehicles are going to make up about 20% of our anticipated market share in 2030. Now, what's that mean for infrastructure? Currently, the ratio of EVs to electric vehicle charging stations is about a 10-to-1 ratio. In 2030, EV experts predict that that ratio needs to be much closer to a 2-to-1 ratio in order to meet the demand. Moving on to the next slide, here you can see a timeline of anticipated electric vehicles coming to the market all the way up to 2030. I don't know if you saw the news over the past few months, but GM recently said that they were going to go 100% to electric vehicles by 2035, and other vehicle manufacturers have proclaimed the same. Regardless, as the demand for EVs continues to climb, the demand for electric vehicle charging infrastructure will also continue to climb. And that's where this opportunity strikes. So let's discuss a little bit about what makes a good candidate for an electric vehicle charging site. As you can see on the right, here are some types of facilities that are really good candidates for EV charging: shopping centers, restaurants, coffee houses, fitness centers, office buildings, multi unit buildings, roadside charging locations, municipalities, schools. There's really a huge list of good candidates for EV charging. Ideal charging locations have high EV traffic or they support a captive electric fleet, meaning a fleet of electric vehicles that are ran through the property, like an electrified school district's bus service. Prospective EV charging sites should be easily accessible and provide ample parking space, and ideally are located in close proximity to highways. Locations where a customer is going to spend more time, like a school or a shopping center, are good candidates for level 2 chargers as they take longer to charge. For fast chargers, they could really be located anywhere. One thing to note is that there are other facilities and other facility types and mixed use types that can also be great candidates for EV charging. So let's break down the different types of use cases for property owners. The first being the most common, which is public charging, providing charging stations that are available to the public so that they can use it to charge their vehicles. A second use case, which I mentioned on the previous slide, has to do with fleet charging. So that is a property owner looking to charge their host site vehicles with electricity. So that could be school buses, trucks, or dealership vehicles that might need that electricity. And the last use case we're going to mention is hybrid charging, where it's a combination of both public and fleet charging, where the public is able to benefit as well as fleet vehicles on site. And with that, I'm going to hand it over to Clifford, who's going to be talking about the revenue opportunities that EV charging infrastructure is going to bring to you. With that, Clifford, why don't you take it away?
Thank you, Joel, and hello to everyone in attendance today. My name is Clifford Chang, and by way of background, I've been in the renewable sector since 2009, and my primary focus for the past 3+ years has been EV charging development. Prior to that, I spent 20+ years in the real estate industry, so I understand the needs of property owners. As you've heard so far, the need for public charging stations has never been greater. What does this mean for property owners? This presents a unique opportunity to take advantage of the conditions in the market to create new revenue streams and new amenities for your properties. Let me get into the specifics of our program, and the key points that I'll be covering are our unique system design, the advantages of our system, the capital contributions we will make on behalf of property owners, and how we're able to pay the highest revenue share in the market. Now, let's turn our attention to the slide. What makes SCF's program unique or advantageous? We bring a scalable charging system and microgrid solution that is ideal for portfolio property owners. We can take a systematic approach, assess your portfolio of properties, and prioritize those sites which are ideally suited for charging. As Shiraz mentioned, we bring a wealth of developmental and operational expertise in the renewable energy field, as well as the financial backing of NextEra, the world's largest producer of wind and solar energy. What do we look for in a particular site? You will see that we need approximately 12,000 square feet of rooftop or parking area for the solar installation, allowance for a construction period, which we will conduct with the least amount of business interruption as possible. We will help designate an area for the charger placement, which is the most advantageous for users and the property owner alike, plus ongoing access for operations and maintenance. Let's turn to the next slide, please. Creating a sustainable solution. What makes our system design advantageous? You'll see in the schematic that our microgrid solution comprises a solar system and battery storage to power our chargers. We can generate approximately 80% of the electricity needed to power our chargers through this system. And what makes that unique? Most charging stations rely on interconnected grid power to power their chargers. Especially in the case of DC fast chargers, this often requires electrical upgrades either to the property or to neighboring transmission systems. Some utility companies bear the cost of these upgrades, but they can fall upon the property or system owner. In either case, it's a lengthy process that can often take 6 to 12 months to complete. At SCF, installation times are far less, and your time to market is greatly reduced. What are some of the other advantages? Number one, the fast chargers will attract more customers who will pay a premium for reduced charging times and convenience. As we all know, time is money. Number two, the cost of electricity generated is often less than purchasing it from the local utility, even with specialized charging rates. Number three, the system greatly reduces the likelihood of demand charges, which can spike your electricity costs. And finally, and most importantly, your margins and profits will increase. This is all good news. Now that you've heard about the advantages of our unique design and microgrid solution, let's discuss the capital contributions made on behalf of property owners by SCF. The table on the right-hand side gives a basic cost breakdown of our system, and you will see that we are contributing more than $1.1 million in property upgrades to each site, contributing a minimum of $1 million in property upgrades per site. I don't know of any property owner who would turn down these upgrades without any capital expenditures. Before we discuss this next slide, let's recap briefly. We have discussed SCF's unique system design and its advantages, as well as the capital contribution made on behalf of property owners. Now let's look at this slide, increased revenue stream to owners. This is another benefit we offer. Not only are we providing our microgrid solution and charging systems with no investment or capital contributions, we also offer property owners a share of the revenue generated by the chargers. This is what separates SCF from the competition and allows us to pay the highest revenue share in the market. Typical revenue to property owners is in the form of land lease payments or site rental payments. Those payments are usually fixed, but our program allows the property owner to share in any upside of increased revenue generated by the chargers. Now let's look at this specific example. This model assumes 5 sites, each with 4 chargers for a total of 20. We are offering a 10% revenue share and a 2% annual escalator over the term of a proposed 10-year agreement. As you will see, the charging revenue in year 1 is approximately $1 million, and the corresponding revenue share to the property owner is just under $100,000. This assumes a utilization rate of 8% per day, or each charger being used 2 hours per day. We feel that this estimate is extremely conservative and will only increase over time. For each hour of additional charging time, the property owner would receive an additional $10,000 in revenue based on these assumptions. You will see that the increase in NOI of $100,000 creates a corresponding increase in property value of $17 million. That is a whopping number, and based on a cap rate of 6%. If the cap rate were lower, the increase would be even greater. I cannot think of any property owner who would not want a $17 million increase in their property value in year one with no investment or any operational risk. I can't think of any reason why a property owner would not participate and take advantage of our program. With that, I will turn things back over to Shiraz, and I thank everyone for their kind attendance.
Thank you, Clifford. All right, so a huge selling point to our EV charging solution is the fact that you get the backing of two industry leaders. As I mentioned at the onset, NextEra is an energy behemoth. They are the world's largest independent power producer, and SCF has partnered with them as we specialize in exactly what we are proposing: commercial, industrial, municipal, nonprofit, on-site energy and charging deployment. It's what we specialize in, and it happened to be exactly what NextEra needed back in 2016 when we partnered with them. The commercial and industrial EV charging sector is a huge focus of ours, so you should feel extremely comfortable knowing that the capital and expertise is coming from our collaboration. So the question that I know all of you are pondering: I want EV charging on site, so how do I get started? Well, the first step is to identify target properties, ideally starting in California, and then provide that list to SCF. SCF will analyze that list and prioritize the sites based on location and potential solar production. From there, we'll kick a proposal back your way that'll include a revenue share. And once that is agreed upon, we'll move on to planning, development, and ultimately construction and commissioning. That entire process can be completed within 90 days. To wrap things up, we really appreciate everyone tuning in, and we hope you were able to gain some insight into the EV charging industry and particularly the EV charging opportunity for commercial property owners. If you have any follow-up questions, feel free to reach out to one of these two gentlemen. And with that, I'll pass it back to Joel for some Q&A.
Okay. Well, with that, thank you all for joining. As Shiraz mentioned, we have a Q&A session, so feel free to add questions. I just saw one come in. Here, let me pull these up. Yeah, but feel free to keep on adding questions, and we'll go through them. And then as we go through these questions, they will also eventually be uploaded to the FAQ section in the SCF suite, which is our proprietary basic cloud-based software. So the first question is, how much space is required for an installation? Will the solar installation increase property taxes? Yeah, so that's a great question, Steve. So in terms of space required for installation, so typically a charger will be able to fit in between essentially two parking spots and essentially apply to two parking spots for every one charger. And the charger is not what typically is going to take a lot of space, but simply the solar, which if you have a carport canopy, is going to be raised above the parking lot. And it's typically out of reach for a lot of vehicles. And so there's not really going to put encumbrances on the site. Energy storage, typically, depending on the size, if it's a 2-hour battery, 500 kilowatt hour, you're looking at 500 kilowatt 2-hour battery, you're typically looking at about half a parking spot in terms of space. And then, as I mentioned on solar, if you can get onto the rooftop, it's not going to affect your parking spaces at all. If you are going to put it on a carport canopy, there are going to be some stanchions that will prevent a few parking spots from being utilized fully by full-size cars, but typically we are ways around that with EVs being typically a little bit smaller. We'll see what the F-150 Lightning comes out if it can fit in a parking spot, but I'm excited to see that. And then, will the solar installation increase property taxes? That's a great question. So that's actually state by state specific and really based off of the county. And so that's going to be Sustainable Capital Finance's responsibility when we complete our diligence efforts to review any sort of taxes, payments, energy sale taxes that will affect the project economics, and we'll bring that in prior to a term sheet being issued. So That's a great question. It is case by case specific, and so our project analysts will address that with you specific to your site. What rate per kilowatt hour are you planning on selling the power? That's a great question. That number is actually all over the place, depending on, once again, the market that you're in and the project economics. So typically, we're going to see, north of 10 cents per kilowatt hour. It could go as high as 35 cents, 39 cents per kilowatt hour. I've seen. So really, it's a use case, and it's also based off of what you're offering to the customer. So if you're offering level 2 charging, that's going to be a little bit slower. As I mentioned, it's going to be typically for places where you're going to be on site for 2, 3 hours, 4 hours, 5 hours plus. So a school district would be a good example. Those are going to not be as attractive for a use case as a fast charger that can get an EV charged up 80% in as little as 2 hours or a little as 1 hour. And so for fast chargers, you're going to be able to charge a higher rate. And our project analyst team and our valuation team will work with the property owner to assess the appropriate energy charging rate that we're going to start at. And typically we'll build in an annual escalator over the 10-year term that will apply to the energy charging rate. And then once again, that also applies to expected usage, right? We are anticipating increased usage year over year throughout these term lengths of 10 years because of our projections into 2030 and beyond with regards to EV charging demand. So we anticipate not only there will be higher charging rates, but more charging on a per kilowatt hour basis as well. So really good question. It is project by project specific, and one of the reasons why we've implemented this EV charging solution into our SCF suite is so that developers can be able to model effectively the different types of scenarios for number of chargers, charging rate, revenue share. All those sort of variables can be solved for in the SCF suite. So we're going to actually be covering that in a webinar next month, specifically on the suite, the SCF suite. But for landowners and property owners, we're definitely going to work with you specifically to your project to assess all the project economics, whether it be the charging rate, whether or not there's going to be solar or solar plus storage introduced as well. So yeah, those are great questions. So we don't have another question right now coming in. One of the questions that I was asked earlier this week as, won't my electricity bill go up if I have 4 chargers installed on my property? And that's a great question, right? So if you install electric vehicle chargers and those chargers are used, you are anticipated to have an increased usage in your electricity. That's one of the reasons why SCF, particularly with our expertise in renewable energies, is to implement and to introduce solar and solar plus storage. And so when you're adding solar, you're really just utilizing the benefits of cheap solar power to charge up these batteries and also to offset your meter's usage. We can also establish all the chargers on a new electrical service if you want to disassociate the charges on that meter with your current building operation. So that's something to consider. And as I was mentioning earlier, you are anticipated to have an increase in usage regardless. So we are going to evaluate solar as a part of a project supplement for all of our projects. And then also for unique projects, we'll also want to bring in energy storage. And energy storage provides additional flexibility with regards to time of use. And so making sure that we're able to charge cars when electricity is cheapest, essentially utilizing those battery banks as time of use manipulators where we can make sure that the energy that is charged up for that battery is cheap power, either solar power or nighttime power. And then that battery bank is going to be utilized during peak times of use to mitigate for peak power charges on your electrical meter service. So that's a pretty standard question. We're definitely going to be looking to explore introducing solar and solar plus storage to a lot of our EV charging fleets. And let's see if we have another question. What state is best for this program? I think Shiraz mentioned that earlier. So California, by far, we're going to see just a huge influx of EVs on the roads in California. We're already seeing a lack of EV charging infrastructure that's causing some bottlenecks in certain parts of California. And so that's definitely going to be an area where the cost of power is very, very high. We can introduce a very nice value add and value proposition. So yeah. Are there particular utilities you know you won't be able to work with? That's a great question. So that's, once again, case by case specific. That's absolutely correct. There are certain utilities that prevent the third party sale of power. And so, for example, Duke over in the Carolinas, that is a major no-no when it comes to third party sale of power. So we will not likely be able to offer our full comprehensive solutions. EV charging is going to be a little bit more unique, and we'll see as the legislation happens on a state by state basis, what are the sort of regulations and restrictions that those utilities can impose on the sale of power when it comes to electric vehicle charging, because that is going to be very different than our traditional sale of power from power purchase agreements. So that's a great question, John. Definitely, it's case by case. We currently have a very good understanding of the California market and where EV charging is going to be best implemented. So if that's a market that you're working in, happy to work with you after this call to kind of identify those specific utilities. But yeah. Do you have any collateral that I can share with others about this program? That's a great question. So we have a landing page that we've built out. So if you just go to SCF and you maybe Google SCF and EV charging, you'll see that landing page pop up at the top of your browser. Alternatively, we're also going to be uploading our one pager to the SCF suite, which you can access through your login. If you haven't logged in, you can register on the SCF suite, and I'll explain a little bit how to do that next month when we launch our SCF suite product. Yeah, it's really going to be exciting and enables our users to be able to run those projects and assess the project economics. How many chargers do I need to generate $10,000 per year for my property? That's a great question. So Clifford's example actually I thought was about a revenue share of about $10,000 per year. So you're looking at 4 fast chargers using about 2 hours per day per charger. So that's just a general rule of thumb. It's going to definitely be predicated on the revenue charging rate. Apologies, I have a helicopter, military helicopter flying over my house. Bear with me. Yeah, that's the answer to that question. Who manages the billing and invoicing for EV charging? Sustainable Capital Finance is going to take care of that, along with the maintenance, operations maintenance, insurance, the warranty. We'll handle the warranties of the equipment as well. And so that's one of the benefits about working with Sustainable Capital Finance is that we have the expertise to handle projects all the way through initial early stage development, through energization and construction and energization, and all the way through asset management throughout the length of these operating contracts. So we have a lot of expertise in making sure that equipment's running smoothly, maximizing the benefits for our customers, because that's how we get paid as well. So that's always something to consider, is that our, that we're aligned. We're about 2 minutes past. I know we set this only for 30 minutes, so I'm going to go ahead and wrap this up. So with that, this is going to be recorded. So if you do want a recording, we'll be able to share that with you. They'll also be uploaded to the SCF suite. But here from SCF, we really appreciate you taking the time. This is definitely going to be an exciting opportunity for Sustainable Capital Finance, our integrator partners, and our property owner customers as a new exciting revenue opportunity. So we're really looking forward to this. And if you have any questions, you can see Dan's email and Clifford's email here. My email is just jbinstock@scf.com. Feel free to reach out to me as well. But with that, thank you very much. And if you have any other questions, feel free to email us and we'll get back to you. Everyone have a great rest of your day.